Welcome back to Smart Dollar Mindset, the channel that helps you achieve financial freedom with smart money habits and investing strategies. If you've ever wondered how to grow wealth without feeling overwhelmed by market timing, fear, or constant stress, then this episode is for you. Today, we're diving deep into one of the most powerful investing strategies ordinary people can use to build extraordinary wealth: dollar cost averaging. By the end of this video, you'll understand what it is, how it works, why it's effective, and how you can use it in your own journey toward financial freedom. I'll also share real-life stories and examples so you can see how this simple, disciplined method can transform your financial future. So let's get started. What is dollar cost averaging? Dollar cost averaging, often abbreviated as DCA, is an investing strategy where you invest a fixed amount of money on a regular basis into an asset, no matter what the price is at the time. Instead of trying to predict whether the market is going to rise or fall, you simply commit to investing consistently, whether that's weekly, bi-weekly, or monthly. Over time, this allows you to buy more shares when prices are low and fewer shares when prices are high, which helps you smooth out the impact of market volatility. Think of it like planting seeds. You don't wait for the perfect day of sunshine to start gardening. You plant seeds regularly, knowing that over time, rain, sun, and soil will do their work. In investing, those seeds are your consistent contributions, and the sunshine is compounding growth. Why dollar cost averaging works? The genius behind dollar cost averaging is not that it guarantees higher returns than any other method, it's that it helps eliminate one of the biggest enemies of investors: emotions. Fear and greed often lead investors to buy high and sell low. But with DCA, you take emotions out of the equation. You automate your investing, stick to a routine, and allow time and compounding to do the heavy lifting. The stock market is unpredictable in the short term, but historically, over decades, it has trended upward. Dollar cost averaging positions you to benefit from that long-term growth while protecting yourself from the stress of timing the market. Real-life example: the monthly investor. Imagine you have $500 to invest every month, and you decide to put it into an S&P 500 index fund. In January, the price per share is $100. Your $500 buys you 5 shares. In February, the price dips to $80. Now your $500 buys 6.25 shares. In March, the price jumps to $120. Your $500 buys only about 4.16 shares. Over time, you accumulate shares at different prices. When averaged, you often end up paying less per share than if you had tried to time the market with a lump sum. This steady approach not only builds discipline but also relieves you from the anxiety of wondering, am I buying at the right time? Dollar cost averaging versus lump sum investing. Some people argue that if you have a large amount of money to invest, it's better to put it all in at once, because historically markets rise over time. And mathematically, that can be true. But here's the catch: most people don't have a lump sum of $50,000 or $100,000 just sitting around waiting to be invested. Instead, most people invest gradually out of their paychecks, month after month, year after year. That's where dollar cost averaging shines. It mirrors the natural flow of how most people earn and save money. Even if lump sum might win on paper, dollar cost averaging often wins in real life because it's more practical, more consistent, and less stressful. Case study: the two friends, let's say two friends, Alex and Jordan, each want to invest $60,000. Alex puts all $60,000 into the market at once in January. Jordan spreads $5,000 a month over the year. If the market goes straight up, Alex comes out ahead. But if the market has ups and downs throughout the year, Jordan may actually get a better average price. More importantly, Jordan experiences less emotional stress. He doesn't worry about the big what if of putting all his money in at the wrong time. This shows the real beauty of DCA: not just performance, but peace of mind. How to implement dollar cost averaging step by step: decide how much you can invest. Start with what your budget allows. It could be $100 a month or $1,000 a month. The key is consistency. Pick your investment vehicle. Most people choose index funds or ETFs because they are diversified, low cost, and reliable over time. Automate the process. Set up automatic transfers from your checking account or payroll deduction. When it's automated, you remove the temptation to skip. Stay the course. Whether the market is crashing or booming, you keep investing the same amount. That's where the magic happens. Track progress, not perfection. Don't obsess over daily prices. Instead, review your progress every few months or annually to see the big picture. Example: DCA during a market crash. Let's rewind to 2008. The stock market fell dramatically during the financial crisis. Many people panicked and sold their investments. But those who stuck with dollar cost averaging kept buying shares at much lower prices. By 2013, the market had fully recovered and then some. Those disciplined investors ended up with far more shares and stronger portfolios compared to those who tried to time the market. DCA teaches you to view downturns not as disasters, but as opportunities. The psychology of dollar cost averaging. We all want to feel in control. But when it comes to investing, control often turns into micromanaging, panic, or overconfidence. Dollar cost averaging is powerful because it simplifies your decision making. You don't have to guess. You don't have to outsmart Wall Street. You simply have to show up consistently. Think of it as training for a marathon instead of a sprint. You don't need to be the fastest runner. You just need to keep putting one foot in front of the other, day after day. Advanced tips for using dollar cost averaging. Combine with rebalancing. Over time, you may need to adjust your portfolio to maintain your ideal balance of stocks and bonds. Use tax-advantaged accounts. DCA works beautifully in Roth IRAs, 401ks, and other retirement accounts where your investments can grow tax-free or tax-deferred. Increase contributions over time. As your income grows, increase your DCA amount. Even an extra $100 a month can dramatically boost your long-term results. Pair with dividend reinvestment. If your investments pay dividends, reinvest them automatically to buy more shares. This compounds your growth even further. From strategy to lifestyle, here's the real secret. Dollar cost averaging isn't just an investment strategy, it's a financial lifestyle. It's about committing to progress over perfection. It's about recognizing that wealth isn't built in a single moment, but in consistent actions repeated over years. Whether you're investing for retirement, financial independence, or simply a more secure future, dollar cost averaging can help you get there one step at a time. Final thoughts. Dollar cost averaging is not glamorous. It won't give you an adrenaline rush like day trading or crypto speculation. But that's exactly why it works. It's steady, disciplined, and proven over decades of market history. The real benefit of dollar cost averaging is not just in smoothing out market volatility, but in reshaping your relationship with money and investing. It teaches patience. It builds discipline. It rewards consistency. And over time, it transforms small, regular contributions into life-changing wealth. Think about it this way: your financial future doesn't depend on what the stock market does tomorrow, next week, or next month. It depends on what you consistently do, year after year. Dollar cost averaging empowers you to take action now, without fear of market timing, and to trust in the long-term process of growth. Whether you're starting with $50 a month or $500, what matters most is that you start and keep going. So as you move forward, ask yourself, will you let fear and hesitation hold you back, or will you commit to building your financial future step by step? At Smart Dollar Mindset, our mission is to help you achieve financial freedom through smart money habits and investing. And dollar cost averaging is one of the most practical, accessible tools to make that happen. If this video helped you, be sure to subscribe, share it with a friend, and continue learning with us. Your journey to financial freedom is built one decision at a time, and today, you've taken another step in the right direction.